What's up, guys? So in this video, I'm gonna do a quick breakdown of a trade I took last week on AUD USD. So in this video, I'm gonna dive into a couple of things. But first things first, I'm gonna actually start this video with a top-down analysis and lead up to the trade. So obviously I took the trade last week, which was executed over here, but we'll get there. But first things first, I want to talk about the previous weeks before that led up to this and how essentially my mind was working, just a dive into my thought process. So nonetheless, the first thing that I do want to touch on is that obviously at this point in the market, looking at this chart in hindsight, I have it in replay mode. AU was bullish. Yes, we could take taking a note that we did make a nice impulsive move to the downside, but technically, from a hindsight perspective, this could essentially just been a higher low to drive price higher, and this is where I want to dive into knowing what phases of the market you are in and understanding the behavior of price within those phases, right? So if you didn't know, my trading style is based primarily around Wyckoff ideology. So within that, I like to focus on the expansions of price, of when price is expanding, obviously, because that's a time in the market where us as traders and investors capitalize the most, right? So that's a very key point to trading, is knowing what phase of price you're in. Are you in an expansion? Did you just leave an expansion? And things of that nature. So taking into note that AU had pulled back here, I want to show how to identify how I essentially identified what could have potentially been the next expansion phase, because we had where price came in. Our primary focus is going to be from here over, but I just want to back up a little bit, and you can see how price came in, essentially runs the liquidity of these lows, had a nice internal breaker structure to the upside. So the liquidity grabs essentially being phase one, the new solidified range being phase two, solidifying a new range here being phase two, right? And within that range, we established the inducement levels being highs or lows either created within that range, or we can see being created at key levels being potential inducement. And then within that range, you see price come down and take the inducement. You have maintenance of the low that took the original liquidity, and then price trades off where you enter phase three of the expansion. Now, the key thing to this is we're going to dive in the anatomy of this expansion, right? And how essentially this expansion was essentially building liquidity to just drive price lower. Now, if you just back up and look at any other typical expansion, you get nice expansions. As you can see, when price expands, it expands. Now, however, the one thing, one of my key rules are to expansions is I don't like to see unsustainable price ranges. And for two, I don't like to see when in this expansion phase, for example, when price is essentially making a lot of higher highs and higher lows and mitigating a lot of nice mitigations and running liquidity, but price is essentially really not going anywhere, right? So for there can allude to me that this is potentially building liquidity for price to then go lower. Now, from a buyer side of the spectrum, I want you to understand how this set up so beautiful, right? Because you got all your inducement liquidities run, the liquidity grabs here, your internal break construction, things of that nature. Come your expansion. If we turn the sessions on here, you get New York, take some previous sessions liquidity, and then creates another range. After post creating this range, you have all these levels of inducement, and then price then comes back and runs, right? So then you're approaching another, and that your internal structure internally gives you another expansion for price to set up, right? Now, here's the thing to allude to is that take note of is that for one, the low that essentially is creating all of this, the catalyst move to here is relatively deep in tracements in regards to the low here. So these are relatively equal lows. All right. So that's one thing to take note of. The other thing to take note of is, like I said, is when you see a lot of mitigations where price is essentially not going anywhere. Now, so that is pretty much how my thought process of this expansion phase was that post this move here and price actually takes this high is very important to understand both sides of the market, because in doing that you can then to start understanding how this this entire expansion phase here that's setting up so perfectly for a buy is actually building liquidity for price to go lower, right? Now, if we jump from here and jump onto this week here, I'm gonna jump out of replay mode just to fast forward. If we jump into this week here, and then we can understand once we understand our intentions with the market, or for me per se, once I understood my intentions with the market, right? And what I mean by my intentions with the market is that when you approach the charts, um, I, me personally, I don't approach the charts with the concept of trying to understand the market's intentions, right? And what I mean by that is because if you think about it, the market is the constant variable in a situation. And what I mean by that is the market is essentially going to move up or down, whether I participated in it or not. It's going to either fluctuate up or down. And that's a constant of the market that's not going to change. So right. So in that, I have to understand my intentions to be able to exploit the market at the best way possible. So understanding my intentions being that, starting from the beginning of the video, of how I built the narrative, right? And then from there, setting rules in play to then capitalize on the next expansion to the downside. Now, what I like most about this is that post this, taking this liquidity here to the left, which essentially created a new higher high, is the behavior in which it did so, right? So I could see that the low that created this new higher high created an inducement, right? Was at a key level. So this would potentially be inducement, right? So then from there, now I'm still understanding the seller side of the market as well. I'm gonna jump to the 14-minute because that's just where I'm point of interest I took on. So I'm still understanding the seller side of the market as well, right? Because looking at this in hindsight, it looks so perfect for a buy, right? However, understanding that we just swept the liquidity of that high, and then the behavior in which we took that, created here, was essentially building liquidity for price to go lower. So then from there, price takes that high, leaves a nice unsustainable range here, as I talk about in all my previous videos. You got your level of inducement created here. Price then runs that inducement, right? Your mitigation. Now from a buyer side of the market, this would be your next expansion phase here. However, look at the seller's model presented, right? Nice, beautiful. You got your maintenance here running as that. You got your nice, beautiful bearish order flow. Now, as the market opens up, this is what I see of this past week. The market opens here. This is what I see. I see Asia comes down. Love that this Asia starts this move to go essentially create this higher low for this bullish, what would have been a quote unquote bullish expansion, right? But then Asia creates inducement with the previous New York right at a key level. New York then trades up and mitigates the previous supply zone created in New York. The previous day, New York, that Friday, what I really loved about this supply candle here in specific was that it took internal structure and internal liquidity of a previous session in London and also mitigated off of supply, right? So I can just see the nice bearish order flow in the market here, right? So even as I've mentioned in some of my point of interest videos, which you can go check those out if you haven't. Once I see this nice bearish order flow intent into the market, I don't want this interrupted from a seller's side of perspective, right? So now the only thing I need to see here is maintenance at this point here, right? Now, in watching this in hindsight, no, I did not take a buy here. And you could have been a little bit aggressive, but me per se, I don't usually take buys off the first taps. But the way the behavior post this move here gave me more confidence that sales are more so in my favor. Because for one, the anatomy of this move alone was not very, you can just see the mitigations here are not very convincing. You know, it's not making, you know, nice significant higher highs and higher lows. You see price mitigating previous demand zones and things of that nature. So that was something that I like to see. And the only thing I needed to see post this move was the follow through, right? So being that New York gave me my reaction that I needed to see, the only thing I was doing was the 14-minute was when I zoomed into the 1 minute here price, there was a lot of, it's not too clean, I would say. As far as like the point of interest and things of that being concerned. So for me, the only thing I wanted to do was, this is where I just had to do some digging. And the 1 minute, it was just a lot of noise here. So I just did some digging on a 14-minute. I just wanted one whole body candle to essentially make the play off of. And the 14-minute gave me that one candle, use 50% threshold and things of that nature. And obviously you can see the sell-off happens from there. Now from here, this is where I understood, like I said at the very beginning of the video, is that you have to understand what phase of the market you're in, right? So from a seller's model, I understood that this was, for my seller's model here to be correct, this was my expansion phase, right? So, and what I mean by that is that that's not saying price couldn't come here and consolidate a little bit and things of that nature, but I don't, when it's time for price to expand, it's time for it to expand. And that's pretty much essentially the only way I'm approaching the market at this point. So that was a big variable that essentially helped and really influenced my sell bias at this point coming into the week. Also, like I mentioned, one big thing that influenced this being the first target is, for one, is just understanding the anatomy of this entire move here to the upside. Now there were a lot of great intraday plays here. There was that I'm not going to dive into in this video, that you can go back and back test. As far as like this sell here was very feasible because you had your internal inducement here, range, breaker structure, you know, your range, solidified range. So this would technically be your expansion. But you have to understand that you're playing in an internal structure. So within doing that, when you do take buys and sells in here, use highs and lows, use your internal structure highs and lows for targets potentially, right? So nonetheless, that's just a very quick video of AU, a very quick breakdown of AU. I hope that was useful. A few key notes just to take from this is just knowing what phase of the market you're in, right? Knowing when price is getting ready to expand, knowing um if price should even be expanding at this point, you know. And I think that really helps influence your bias, and also knowing your intentions, not the market's intentions, but your intentions with the market. And then the last key note that I do want to leave this video with is that um, I feel like from a retail perspective, this is kind of like just like a quick psychology tip. Is from a retail perspective is let go of the ideology that there's some bank or some institution essentially trading against you or out to take your money, or some guru at a bank that knows their stop losses here and things of that nature. Let go of that ideology and just and approach the markets from a standpoint as the only person out to get me in these markets is me. And your lack of understanding is the only thing hindering growth at that point. And then doing that, when you start to approach the market from that perspective, then you start just getting behind the markets and asking yourself certain questions like, okay, well, why did price behave like this? Or why did price do things like this? And from that point, then you get to build a library of essentially back testing and learning how to flow with price. And then from there, you grow to learn your intentions with the market, right? So that's just a quick psychology tip. um, Focus on your intentions, not the market's intentions. Always remember that this is the constant in the situation. And whether we get behind here and press buy or sell or not, this is going to fluctuate up and down either way. So learn your intentions with the market, then from there create a plan and execute it. Hope this video was useful. I'll see you guys on the next one.